Small checks, 5K, $500,000, etc. I gathered basically this 3.5 million. All of a sudden, when I went back to them and say, by the way, now I need 7.5 million, they were like, you're crazy. At the end, we settled on this financial institution called Payflex Microfinance Company Limited, which no longer exists, but it's the one we acquired. And the founder realized how hard it was to run this business. He had put some equity in. There was equity that was required to clean up the business. He wasn't greedy. He understood the situation he was in. He said, just give me back my money and I will give you the business, basically. So for us to enter the market, it was the cheapest way to enter the market with the limited amount of funding that we had. And that's how we end up acquiring a microfinance institution.
So speaking to someone in a digital lending business, and you're so right, and I was trying to explain the same thing to them, right? For them, the challenge was that we're at a situation where we can't grow our limits with our clients, right? Because all our clients are borrowing from multiple sources, because each one of us as an individual credit provider cannot increase our limits to the point where we can give this person the entire need. Today on the F Squared podcast, we're joined by Tarek Mouganie, CEO and founder of Affinity Africa, a leading digital bank in Ghana. Tarek's journey is anything but conventional. He holds a PhD in material science, built a career in high finance in London, and then returned to Ghana to tackle some of the hardest problems in banking. In this conversation, we unpack how Affinity has grown into a leading digital bank, why licenses and regulatory rigor matter, and what it really takes to build meaningful credit models in a market like Ghana. We'll explore the bank's unique phygital approach, the balance between SME and consumer lending, and the product bets that have driven their rapid growth. Most importantly, we'll ask, what does it take to scale a digital bank beyond Ghana, and what unique insights fuel that ambition? So, Tarek, I wanted to start, and I was doing a lot of research prior to this discussion, right? One thing I found out is that you got your PhD in material science at 21, right? If I'm not wrong, you're fourth generation Ghanaian, right?
That's
right. And you, at some point, you run one of the largest hedge funds in the world, or very senior executives at one of the largest hedge funds. I don't know if I've gotten that detail particularly right, but
you have.
What is most interesting is that there's a story about your mom telling you to leave it all behind, leave your job in finance, and come back to Ghana, right?
Yeah.
And I think there's no better way to have an intro without circling that entire story.
Absolutely, and I'd be delighted to tell you that as well too, and maybe perhaps kind of touch a bit on my immigrant background.
Yeah.
Maybe that would be useful.
Yeah.
Because I do obviously consider myself Ghanaian. It's where I was. It's the nationality I had until a handful of years ago. I have a British passport now, but obviously not British. I'm fourth generation Ghanaian, as I mentioned, as you mentioned already. I'm on both sides of the family. Heritage is Lebanese. Family emigrated from both sides to the continent. There was a terrible famine in the 1800s in the Middle East, and people left. They left basically across all of Europe and Southern Europe, the Mediterranean, and all the way to the Americas as well too, which is why there's a huge population of Lebanese in countries like Mexico and obviously the US and Canada as well too. My family kind of ping-ponged across the Mediterranean. I think at one point they settled in Italy, then kind of migrated down the west coast of Africa, like a lot of Lebanese families, into Senegal and also into Ghana for a brief stint. Went to Nigeria. I'm not going to badmouth Nigeria, but they didn't like it. And then came back and decided to settle in Ghana.
Yeah.
And my grandfather, who's passed since, told me the story about how he was put on this boat, on the ship, basically. His father kind of sent him off. And he went to boarding school in Lebanon because his father basically was working in Ghana at the time. And then when he came back to meet his father on this boat that went all the way across the Mediterranean, imagine back in the 30s, this sort of thing happening. Yeah. He met his father basically the first time as a young adult and took his hand out and shook his hand and said, "Hello, sir, nice to meet you." It's a story that kind of sticks with me because I think about kind of the generations of my family and how I ended up who I am because of them.
Mm.
I recently lost my grandmother. She passed a couple of
Sorry
weeks
about
ago,
that.
and she raised me.
Mm.
Like she was born and raised in Kumasi.
Mm.
She retired from Ghana and moved to the UK. Ghana is a Commonwealth country, and it
Mm.
was back then relatively easy for you to do that
Yeah. Yeah.
flow. And she raised me, and it was a similar sort of thing. Like that generation of my family were never educated. They
Mm.
didn't go to university. They went to school, but never to university.
Mm.
And then this wonderful thing happened where these entrepreneurs kind of stepped up. They were heads of industry at the
Mm.
time of their generation in the 30s and all the way down to the 60s and 70s. They made enough because human nature sank in where they sent their kids to school and to
Mm.
university.
Yeah.
So step, the generation afterwards, where my dad and my mother were their first in their families to go to university, the
Mm.
first in the generation to go to university. And what's wonderful about human nature is that you always want more,
Yeah.
right?
Yeah.
I'm sure you have a nice home, you've got a great job, but for people who like us, especially displaced people and
Mm.
people who have seen and have been able to travel, it's that ambition and that level of growth always sinks in, and it's
Yeah.
human nature.
Yeah.
You want a little bit more salary, you want a little bit better for your kids
Yeah.
all the
Yeah.
time. And I was a recipient of that sort of luck, I would
Mm.
say, and
Mm.
that sort of like ethics and that work.
Mm.
And my parents were lucky enough to be able to send us to the UK,
Yeah.
not forgetting our backgrounds. I
Mm.
moved to the UK when I was 12 from Ghana,
Yeah.
not even from Accra, from Kumasi, which is
Yeah.
where I was raised. And I had an amazing career. I had an amazing time.
Mm.
I did my first degree in engineering, my PhD, as you mentioned, in material science as well too. I was a very hard worker, not because my parents put any pressure on us. They
Mm.
told us, do what you love and you
Yeah.
will succeed,
Yeah. Yeah.
as long as it's ethical and you treat others right.
Yeah.
I worked very long hours. I knew that there was a finite amount of money. So instead of taking long summer breaks, I would stay in the lab every single day. I work 100 hours a week,
Mm.
sort of what I'm doing at Affinity right now. And it was all for me.
Mm.
And as a result, I got into university early. I finished university early as well too,
Mm.
and it made me quite attractive in a market where
Yeah.
people were recruiting.
Yeah.
So this hedge fund comes along. They give me this offer, and these guys were. It was when I joined, it was the second largest hedge fund in Europe.
Mm.
When I left, it was the second largest in the world. I left 10 years later.
Yeah.
And I didn't run it. I was senior, but I didn't run it. I don't want to take credit for that.
Yeah.
But I was a senior executive, as you mentioned,
Yeah.
in the organization itself. I was
Yeah.
kind of director level after joining as an analyst.
Yeah.
And I was hired by 3 very senior people, the founders. I worked directly for them. And they were the most intelligent people I'd met with tons of experience. They came from backgrounds at Goldman Sachs, very senior partners who then spun out and created this hedge fund. They knew everybody, like every single famous and important person who would pass through London would step by through our office and meet with us. Celebrities, politicians, everything. It was sort of this like whirlwind of an environment and a pace. But the people I worked with were cutthroat, and I'm using a very polite term here. I don't want to use an expletive, right? And the question that I always had in my mind was, do you have to be this aggressive to get a job and to succeed in a career like this? Or do you become like this because of the experience of working in an organization like that?
Yeah.
I can tell you firsthand, after being there for a decade, it was the latter, and I started becoming a cutthroat individual. So when my mom was visiting me, and I owe a lot to my mother and my grandmother as well too, who obviously kind of passed these values on to us because my grandmother raised me. She looked at me and she said, "I don't like who you're becoming." And in life, you can't choose your family because you're born with it. But you can choose your job. So maybe you should think through the decisions you made in your life. And I'm sure as an African as well too, and certainly with people with Middle Eastern heritage, for us success is making money, right?
Yeah, for sure.
So imagine your African mother tells you you're working for the second largest hedge fund in the world. You work for the founders. You're earning a decent amount. You have a house in London. But stop. You know what I mean? This is bad for you. Just imagine how bad things were for her to say something like that. And I tell you, she called me. I was in the office when she had this conversation. I stood right up and I went and actually resigned to my boss at that point.
Wow.
It was the wake-up call that I needed.
And if you think about it, I'm sure you look back and you're like, you actually saved me, and that's what a mom's supposed to do.
100%.
Yeah.
100%. And she kind of like I learned my values and my ethics from the people around me, right? Your guardians, your parents. In my case, from the age of 12, my grandmother raising me, right? That's such a pivotal point. From anyone who has any sort of authoritarian figure around you, sometimes teachers, older siblings and whatnot. And these are sort of what form the values in your core.
Yeah.
And it's something that's been super important because success for them was important. Like, you're like, make your money, live, like lead with ethics. My father was a huge kind of supporter of build for the long term. It's very easy to make money short term, but build for the long term.
Yeah.
And those are the things that basically we carried with us as a family. These are the things that basically matter a lot to me. So when we're like recruiting now in the organization, when we're speaking to investors, these are the values that are super important because when you're building for the long term, which we have to in our part of the world, that alignment is something that's super important. And that's something that you learn from your upbringing. It's the experience that you get around you.
No, you're right. And I remember one of my guests saying, and it's so true, that in Africa, speed can only come after alignment, but it can't come before alignment. And if you don't
100%.
have alignment, you're not gonna scale. But now moving now into very interesting background. Your mom did an intervention. Now that you look back at it, and how does that translate into starting a microfinance, or at least buying a microfinance, and then now scaling it into Affinity. And especially because, like, from the outside looking in, Ghana has a relatively advanced fintech ecosystem, especially in terms of basic inclusion, basic access to payment services. How did this opportunity, start conceptualizing in your brain? How did that story come about?
Absolutely. I think there are kind of three answers to your question as well, too. The first is, I want to disagree slightly on how advanced the fintech ecosystem is in Ghana, because I don't think there's enough competition. And competition is very good for consumers, right? Because it gives you a choice. I think it is advanced in this fact that, there are certain providers like digital lenders, as an example, mobile money providers as another example, where penetration is very high. But they're very monolithic ecosystems. So I think there's a lot of space of maturity in these environments. Like, I would say Kenya is probably a more advanced country than Ghana in that regard. And we don't sit or compete with any one of these individuals. We've kind of created something kind of very different, which I'm sure we'll touch on. We'll touch on later. But let me step back. You kind of mentioned the microfinance thing and kind of building in this environment and where this idea started from. I want to step back like kind of 10 years ago and pick up from the point that, that phone call that I made where my mom hung up on me and told me to like wake up, kind of like rang the bell, and I snapped out of it. I quit. I quit my job. Didn't know what to do with my life. I kind of had a North Star that I had before the financial crisis, where I wanted to try and understand economic development, in particular how it pertains to Africa. So when I joined this hedge fund, the promise was to start an Africa fund. But when the financial crisis hit, that Africa fund was canned because obviously everyone went into survival mode, right? Imagine now as a startup, you're launching products and then you had the VC winter. Now you can't fundraise anymore. You're going to cancel all those products and focus on your core. A similar thing happened, right? So all of a sudden I was in survival mode. I couldn't leave to start my thing. No one was going to launch an Africa fund in a difficult environment like that when the whole world was uncertain. And at the same time, all my friends were getting fired. So the fact that I still had a job was super important, especially a good job, right? So that wake-up call happened from my mom, and I had to go back to my values. I came back to Ghana. I'm not kidding. It took me maybe 2 years to recover. I went from working over 100 hours a week, where I would go into the office at 6 in the morning, because we had traders around us. I wasn't a trader. I was like an analyst, portfolio manager, and then a director. And then I would work after hours with with lawyers, with our investors, with our team members, etc., till 11 p.m. And I would do that on a Saturday and Sunday. For a period of almost 2 years, I took a flight every Sunday at 3 p.m. to go to New York, stay in a hotel for 4 days, take the red eye on Thursday, land at 5 in the morning and go straight to the office. I would go to my house for like 24 hours each week. And I did that for 2 years as well, too. I was exhausted, So there was a couple-year period, which right now I look as a blessing, even though it was kind of patient. There was a 2-year period where I had to try and figure out what I wanted to do in my life. And I had the means to do that. I had some savings, basically. And I had the space. I stayed at my parents' house. I wasn't renting anywhere. I actually didn't start renting anywhere until I got the license in the end to launch Affinity. That was sort of, I had this goal in my head, a KPI, like when you get the license, you can rent a home in Ghana, you know, and be independent as an adult. And I told myself, what do I want to do with my life? And I had a number of ideas, you know, ideas all centered around economic prosperity. So things around job creation, around export to help our economies, because Ghana is a net importer, which is obviously not a great thing in our part of the world, even though we have a ton of resources.
Yeah.
I was looking at setting up a VC fund. I was looking at set up like an accelerator program, real estate. There were so many things I was exploring. And then at the end, I became obsessed with this idea of micro, small, and medium-sized enterprises. What I failed to mention kind of earlier on is in the last few years when I was at the hedge fund, I actually specialized in investing in financial institutions and banks. And I had about a pocket of funding of about $5 billion, which was very small. You know, it was a 160 billion euro fund. You know, so 5 billion was not much, but a lot, obviously, in the context of Africa. And I focused on investing in financial institutions. You know, at one point we were a 2% owner of Amex, for example. We helped with the IPO for Visa as well too, with JP Morgan in New York. So when I moved back, naturally, I was inclined to like focus on financial services, and I started understanding and studying the banking industry. And I realized that fundamentally banking, in the true sense of the word, not the neobank sense of the word, banking was broken. You know, banks were developed in the global north. They made an assumption on the customer type that you had an address that was verifiable, that you had a pay slip, that you were profitable, that you made enough money, you know, because the barriers and the cost to bank an individual were so high. I realized that it was broken, and I became obsessed with this idea of solving for this problem. So that's how the sort of like the foundation of Affinity started. So to your question on microfinance, it wasn't the initial plan. The initial plan was to actually start with a savings and loans license, which is the license category that we needed in Ghana to start Affinity. And I'll touch a bit on that later, but I want to tell you the journey of how we got there first. We approached the regulator at the time, and at the time it was about $3.5 million to get a license, a savings and loans license. We were chatting to the regulator. I was going back and forth. There were incidences where, you know, they would not turn up things. I was a boy. I was not important. I wasn't at a bank, and, you know, I wasn't rich or important or famous or anything like that. And there were incidents where they would ghost me, you know, even before ghosting was a thing. I would sleep on the floor of the regulator's office, basically, in the lobby, just to catch a regulator. I would be eaten alive by mosquitoes in the morning, you know, and pray that I don't get malaria in Ghana. And I realized how difficult it was. But for some crazy kind of, coincidence, I managed to get their attention. I managed to have a relationship manager that worked with us. We started the application process. My former bosses gave me some money, basically, to start this, the process of getting the license. And midway through this process, there was a crisis that hit Ghana. And the banks started collapsing and failing. And commodity prices shot up. Commodity prices shot up. It was around 2013, 2014. Microfinance institutions being shut down, savings and licensing. It was a whole mess until about 2016 as well, too, which I'm sure you're aware of. As a way of bolstering the equity balances, basically, and the capital requirements for these financial institutions, what ended up happening midway through this process is, for a savings and loans license, it was at the point $3.5 million. It went to $7.5 million of equity was required. So throughout that process, what happened is I failed. You know, I raised this funding. I went to 40 countries in a year. Imagine just going around, cap in hand, saying, "I'm begging you, give me some money. I have this brilliant idea. The country needs it. The continent needs it. People need it. Not only will you get a return on your money because this is a bank and banks are profitable, but on top of that, there's social good that we're building together." Small checks, 5K, $500,000, etc. I gathered basically this 3.5 million. All of a sudden, when I went back to them and say, "By the way, now I need 7.5 million," they were like, "You're crazy. Go away." Natural. Throughout this process, and this was again 10 years ago, there was a figure in my life that was giving me advice. He came from a private equity background. And I'm not going to name names because he's actually in the process of now becoming our board chair, by the way. So it's a full circle moment. And he told me, he looked at me and he calls me Doc, which makes me laugh. He says, "Doc," you know, and he's kind of this like staid, you know, like gray-haired, older individual that has like very serious tone whenever he speaks
Yeah,
to me.
yeah.
He kind of balances me out, and I lean a lot on him, and I have done over the last 10 years. This was this was October 2015. Um, and it was the last sort of nail in the coffin where I couldn't get the license for the savings and loans license. And he told me, Doc, it's going to be very hard for you to raise this money in this environment. No matter how well connected and how charismatic and how much of an idea you have, you're crazy. What I would recommend you do is if you can find a way of proving the concept on a small scale, that'll make it a lot easier for you to then basically access further funding. And in that one conversation, and I remember vividly where it was, I hung up and I said, okay, I'm going to try and buy an existing financial institution, clean it up, and then on the back of that, apply for the license upgrade or name change and launch our products that way.
Got it.
In all honesty, we looked at a number of financial institutions. We looked at universal banks. One of them has since collapsed. We tried to buy them with a cohort of other investors, and I was leading the charge. I got an offer a couple of times to be the CEO of a big bank in Ghana, which obviously I turned down. We looked at savings and loans institutions, but a lot of them were in trouble. A lot of them required a lot of money to clean up their balance sheets. And at the end, we looked at 19, we signed NDAs, and we did due diligence on 19 financial institutions. At the end, we settled on this financial institution called Payflex Microfinance Company Limited, which no longer exists, but it's the one we acquired. And the founder realized how hard it was to run this business. He had put some equity in. There was equity that was required to clean up the business. He wasn't greedy. He understood the situation he was in. He said, just give me back my money and I will give you the business, basically. So for us to enter the market, it was the cheapest way to enter the market with the limited amount of funding that we had. And that's how we end up acquiring a microfinance institution. It wasn't the goal. We couldn't have launched Affinity with a microfinance institution. But what it did is it helped us begin a platform where we could test, build, and ideate whilst we waited basically to get this license upgrade, which eventually came through.
Got it. Yeah, very interesting. And one, I'd want to touch on two things that come from there. The first is this whole idea of like banking for the global north versus banking for where we are at the moment in Africa. And, you could argue that, listen, you're not gonna have banking at that kind of scale in Africa, just because people are so dispersed. The populations are huge, the distances are huge, so branch-based banking is not going to work. And then, of course, if you look at the economic structure, you've got governments borrowing, you've got large corporations, and therefore, if you're running a balance sheet, you'd rather lend to these sectors than lend to the real sector. But you'd say that, in the absence of that now, you have kind of like mobile money and some of these other institutions filling the gap, right? I want to understand what that specific gap is, in your view, when you talk about like real banking for MSMEs in the market, just to understand how you really perceived this gap.
100%, and you're spot on. I will push back on the fact that it is possible for us to build a big bank with a huge balance sheet that banks basically this segment of the market that have been historically neglected by incumbent banks. Because the population is huge. We are the youngest continent in the world. We're the only one that's quickly growing, and as the years go by, we're incredibly relevant as a continent, but we will become more and more relevant. So the timing is right for that. I want to paint a picture basically of me as an individual with privilege and two passports, right? A Ghanaian passport and a British passport. And how I deal with my life when I'm in the UK, like I'm visiting now for a few days, versus my life back in Ghana. It's very easy for me here. I go to a bank. I have a pay slip, a paycheck. I have an address that's verified. I have a registration where my tax is collected. Everything is incredibly seamless. None of it is an administrative burden. And everything is designed so that I won't have to think about being a responsible citizen. As a result, when banks look at me with a credit score, with a pay slip, with my directorship at a company, because everything is transparent, they can make a very quick and easy decision for them to bank me. Okay? So if I walk into a branch, open an account with Monzo, it's kind of relatively, I don't want to say dissimilar, but let's say it's the same. I walk into a branch at HSBC, within an hour I get a bank account, right? So for that bank, how are they thinking through a customer acquisition journey? I'm paying for the teller. The teller is collecting Tarek's application form. The teller is costing me X. The bank branch is costing me Y in terms of rent and utilities and whatnot. As a result, the cost of acquiring Tarek is maybe $50. Tarek makes $1,000 a month. We're lending $1,000 a month at 10% interest rate. So we're making basically $100 a year, basically, or maybe more than that, $1,200 a year, basically, from Tarek.
Yeah.
So the payback is relatively quick. It's 2 weeks and we get a payback, right, from me. Now I'm Tarek. I go into a branch in a bank in Accra, right?
Yep.
Firstly, I'm queuing for hours. I go up to the teller. They look at me and they're like, okay, this guy's educated. He went to a good university. He has a job, et cetera, et cetera. So tick, 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 tick. But now we have to prove everything.
Yep.
We need a letter from your employer. I go back and I come back, right? Because they can't prove. There are no databases for them to prove anything.
Yeah.
I need a letter now from your utility bill. My utility bill is not registered with me. It's under my landlord because to move it to my name is a pain, right? And it would take them months for them to do that, and they don't do it. So as a result, I have to inherit it, right? Then I have to have like a letter from my employer, a letter from my landlord saying I've been renting and I'm in good standing, da, 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 da. Okay, 2 weeks have gone by now. And then I'm going back and forth each time, submitting documents. It's taking that teller an hour each time. So let's say, just to make the math simpler, now it's $150 is the cost of that bank branch to onboard me as a customer versus the $50. And these are actual numbers versus the $50 basically for a bank branch UK.
Yeah.
All of a sudden, I need to be 3 times more profitable just to break even for that customer. By design, the framework basically for KYC, for onboarding, for all that, has negatively impacted the majority of Africans that happen there.
Yeah.
Okay? So the way I see it is a proper retail bank needs to be created for the African majority. And that's very, very important. And that doesn't exist. That doesn't exist in our continent. Different products across the different silos for these banking products do exist. And let's touch on that next. Yeah. And then maybe at the end, I can sort of explain to you what we're trying to build and then how we compare basically to other digital banks. Yeah. So as a result of this failure, by design, by the way, not by want or need, as a design failure, it has necessitated products popping up to address the needs of customers across each of these pillars.
Got it.
A very good example is mobile money, right?
Yep.
Mobile money only exists in Africa. It doesn't exist anywhere in the world.
Yeah.
Right?
Yeah.
Why does it exist in Africa? It exists in Africa because banking failed.
Yeah.
If banking had succeeded in Africa, mobile money would not have been a necessity. It's as simple as that. It's a very important product, but mobile money is a payments provider. It's our equivalent of a Visa and MasterCard.
Yeah.
You have a wallet. They monetize the platform off of payments. That's basically how it works. It's not a bank. On the flip side, you also have digital lenders, on the complete extreme of one end. You have digital lenders that have necessitated the fact that a lot of people, there's a pent-up demand for credit. In sub-Saharan Africa, as you know, it's $331 billion, right? Yeah. It's crazy. Yeah. Such a huge opportunity, right? So rightfully so, these digital lenders, just like mobile money, have come in and said, we can plug the gap in there. The interest rates are astronomical, 10 to 16% a month, which I'm sure you know as well too. Yeah. And they're built because they see this opportunity. Digital lenders exist in the global north. In the UK, they're digital lenders. They exist for customers who have a poor credit history because they can't borrow from a bank because they have a poor credit history, right? In our part of the world, they exist because people don't have an option. Because you either go borrow from your friends and family, if you're lucky, or you go to a digital lender and take on these astronomically high rates, at 7 days, 14 days, if you're very lucky, 3 months, and that's it. Yeah. So what we have done at Affinity, going back to kind of like the earlier stage, is we brought kind of everything together to build a holistic solution that actually focuses on providing full-fledged banking services like a retail bank would. And we're solving across each one of these multi-products. So holistically, we don't have any comparable, but each of our products basically solves for these separately. Yeah. So if you don't mind, I can touch a bit more about what we do and how we approach the problem, which is very different.
I think we'll get there. We'll definitely get there. But it's interesting you say that because I was speaking to someone in a digital lending business, and you're so right. And I was trying to explain the same thing to them, right? For them, the challenge was that we're at a situation where we can't grow our limits with our clients, right? Because all our clients are borrowing from multiple sources. Because each one of us, as an individual credit provider, cannot increase our limits to the point where we can give this person the entire need, right? And it was
Mm-hmm.
like, is it a data issue? Is it? And I was telling them, no, it's a relationship problem. You don't have a relationship with your customer, and the only way you can build a relationship is if you build more full stack and provide everything, because
Yeah.
until then you're in this kind of death zone where all of you can only lend $100, nothing more, nothing less, and you're
Yeah.
stuck.
And I think, and you're spot on. And there's a story I want to tell you because you
Yeah,
remember those 2 years I told you I was having fun in Ghana trying to
yeah,
figure out what I want to do with my
yeah,
life. I
yeah.
have a direct story to relate to you on that front as well too. But those limits are also not just restrained basically from a customer point of view. The fact that they don't have access to like the full history and data, the relationship they have with the customer, they're able to prove what the customer can also borrow. That's also something that's very hard for a digital lender.
Yeah,
On top of that, there are also regulatory limitations.
yeah,
So, for example, in Ghana, you have microcredit licenses,
yeah,
which a lot of digital lenders use.
yeah.
There's a limit in terms of how much you can lend in order to mitigate. So, regulators have used those limits as a way of mitigating risk. So,
Yeah,
there's no systemic kind of damage,
yeah,
in
yeah,
terms of people multi-borrowing and defaulting as well, too.
yeah.
The example I want to give is when we had this microfinance license, there were also limits on microfinance. They were higher than microcredit, but they were still capped, right? And what we noticed is there were a lot of customers that were good borrowers that were defaulting. I'll give you an example. Let's say, go back to the story I told you about my family, how,
Yeah.
grandparents didn't go to university,
Got it.
parents went to
Got it.
university,
Yeah.
parents wanted me to go to an even better university. And if I
Yeah.
have kids, I would want them to even thrive even more, right?
Yeah.
It's a similar thing to any entrepreneur. Our entrepreneurs were coming to us and borrowing, and we told them, hey, you can have, let's say, $1,000, right? They would borrow, they would grow their business, pay it back, come back for $2,000, $5,000. All of a sudden, they hit their limit. They hit their limit, and we told them, well, you can't borrow anymore with us because our license is restricted, right? We can't lend any more than that. What would happen is all of a sudden they were thinking, hang on a second, I really want to grow my business. Why is this institution telling me I can't, right? And as a result, they would then use the data that they had of good borrowing from us, borrow, let's say, $10,000 from us at the limit, go to other institutions, borrow $10,000 from each of them as well, too. So all of a sudden they were borrowing $30,000, and they were misusing the funding as well. Because what happens is the larger you borrow, the more you want to invest in your business.
Yeah.
It's not working capital anymore.
Yeah, now it becomes
You're looking
fixed
at it from a growth capital point of view.
Yeah.
And sometimes you cannot service that debt because the interest rates are so high
Yeah.
that you cannot service a 1 or 2 year loan, if
Exactly.
you're treating it as a 1 or 2 year loan.
Exactly.
And we noticed that these customers were defaulting as a result of that. Not because they were bad borrowers, but because they were being given the wrong type of loans as well, too. So what we've solved for Affinity, which is very important, is we're giving loans up to 5 years in our business, up to $100,000 at 5 years. And
That's
the way
very
in which you
rare
scale-
from like a startup perspective.
100%. And look, these are not all our loans. Like in the last year alone, we've given over 7,500 loans,
Yeah.
right?
Yeah.
About 6,000 are these kind of micro loans that we're kind of like sitting alongside the digital lenders with, even though we're lending at 50% lower rates.
Yeah.
But what's very important is most of our loans, certainly from a value perspective, are long-term lending to SMEs. And these are customers that are borrowing from us, sometimes working capital at 3 months, sometimes 6 months, or sometimes growth capital up to 2 years. And that's something that's lacking in the market. And that's what we're trying to solve for, which is very important.
And so one thing, and I think this led to a question I'd written down. You're a smart guy. You understand finance better than most. And traditionally, with this kind of credit businesses, you need to have like a unique capability around a few things. Number one, you can collect, right, better than the guy next door. You've got a unique underwriting capability. So if you think of, let's say, Ant Group and the Alibaba data, right, or Nubank and their very advanced credit scoring system, you need to have a distribution advantage and you need to have like a customer acquisition advantage, right? So far you're a savings and loans. You've got a savings and loan license, right? And that gives you capabilities to offer basically a retail bank account. But what gives you, where do these unique capabilities come from? Because that's where the rubber meets the road. What gives you a unique underwriting capability, and how have you thought about some of those things?
You're spot on, and these are things that keep me up at night, kind of thinking through over and over and over again how we solve for our growth. In particular, like more recently, when does this episode air? Out of curiosity.
Maybe in a month's time.
Okay, great. So I can do, by the way, just crossed 20,000 customers.
Yeah.
So you're the first to hear that.
Yeah.
We've actually acquired 13,000 customers this month alone, by the way, just through word of mouth.
Wow.
So things are obviously going gangbusters. But let me kind of step back and kind of tell you about how business works, and then I kind of plug in terms of how we're looking at our growth in the
Precisely.
short term.
Precisely.
So our business differs to any kind of like player in the market, whether it's a mobile money provider or an instant lender, because we build a holistic solution. We don't consider ourselves a neobank because neobanks in particular, they drive revenue either through transactions, so they're either like debit card led, like a Monzo, or they're transactions led, like a Revolut makes like 60% of the revenue from crypto trading, right? We actually look at ourselves as a digital bank where we provide everything holistically. So we're balance sheet driven. For our customers, they open an account, we give them the best savings product in Ghana, and then eventually we lend to them as well too. Our revenue comes from a balance sheet, whether it's lending or investments, but from a customer experience point of view, the first thing they get are deposits and savings, and then eventually kind of loans and other products as well too from us. This is very important because unlike a digital lender, we borrow in local deposits. We collect data on our customers, we underwrite, and we score them, and then we provide loans to them. And that's how we work at the essence of all that. So from a user experience, we tell you, unlike any other bank in Ghana, you can open an account in 30 seconds. Amazing, right? On top of that, unlike mobile money, there are no limits on your account. So it's an unlimited account. There are no daily transaction caps as well too. On top of that, any other bank, we're completely free. No monthly fees, no transaction fees, because we have full interoperability and we built everything ourselves. On top of that, you also have savings products, low interest bearing that are more transactional, high interest rate bearing that are like, top ups, and then even investment account have very interesting, lock up your money up to a year as well for peace of mind go forward. So as a result, by building, that's how we like enter the market, and that's why we're going gangbusters, because people are like, holy smokes. Keeping cash is cheaper than going to a bank, but the charges are so high. Transferring money is so expensive at 4% plus, remittance costs are crazy, as I'm sure you know as well too. Here is a solution where instead of keeping cash under the mattress, we can put it here, it's safe. It's with somebody where deposit protected as well too, by the regulator. And on top of that, I'm earning interest on this account. And I can open different wallets, for like stock in my office, blah, 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 all that sort of stuff, right? And at Affinity, we can do all that. We can not only open retail accounts and individual accounts, we can also open business accounts, by the way. So we can do everything for MSMEs. What we end up doing is, this is how we kind of acquire our customers now. And that's why it's been kind of going crazy, as I mentioned, the last few months. And we've gone over 3x our customer base in less than 12 months with very little marketing spent. So then what happens now? You join us, you open an account with us, we start using your data to credit score you. It's very different basically to digital lenders because we have information on our customer in terms of affordability, like a traditional bank has. We know your income because you're using us as a bank. 90% of our customers were their primary bank account. So for example, you're putting your paycheck in because you're formally employed. Let's say you work at an F&B business at a hotel or something like that. You're getting your paycheck into Affinity. We know that, Edith is earning $1,000 a month and she's spending $800 a month as well too. We use that information. It's all ethical. We don't track your location. We don't use any of that sort of stuff, that's unethical. We don't access your accounts and your contact information. We use all that information to create a credit score for you, and then that's how we start lending to our customers. We credit score between 30 to 90 days. We extend a line of credit, and when you borrow, we repeat borrow over and over again. The same thing that we did with the microfinance institution, the example I gave you. Except this time around, as you grow with us, we don't have any limits. You can keep on borrowing over and over and over again. What's wonderful is like since we started lending, and I told you this, it's 7,500. Our default rate's been less than 2%, and our machine learning model is improving, and it's learning more and more and more as it goes through in terms of collecting this data and improving our data. So I just sort of wanted to explain to you the core of how we work and the core like fundamentals of how we work. We do the same thing with SMEs. I said we lend up to $100,000, and then we do as low as $100 basically for instant loans. So I just kind of want to explain to you kind of the core. The next is kind of try to sort of explain how I see how other lenders in particular, with Nubank, there's a direct read through with us versus let's say Ant Financial. How they have like scaled really quickly and how I see the challenges in our part of the world and how we're solving for it. So with the example of Ant, it's a really good example, and so many of my investors kind of talk about it. They had a plug-and-play partner there, right? They already had the data, they had the distribution network, et cetera. It made sense for them to do that. A friend of mine, an advisor of mine, was the CEO of Resigned, which was a SME bank in the UK. He has been poached basically by, and this is sort of top secret, by a really large investor to start a bank in the Middle East. He got given $400 million to start this bank from this investor. And this bank is plugging into a retail network where they already have data. It's a similar Ant model. For them, it makes sense. We can get a banking license. All of a sudden, you have 100,000 customers overnight, right? Where you can start lending to and scoring data. Things like that are great. My question to you is, what partner looks like that in our part of the world? It's very hard to find someone like that, right?
Yeah. And I wrote recently that in Africa, unlike different parts of the world, in Africa, banks actually have larger distribution than retail stores, right? But like in a Middle East, in a South Africa, supermarkets usually have larger distribution than banks. And that's why that concept just doesn't work.
Absolutely. And that's spot on because we've been racking our brain thinking through. And look, there are some retail outlets. They're mostly like banking. They're mostly kind of serving the mass affluent, which are, I would say, like the top 40% of our customers. There is still that sort of 60% at the bottom. And when I say 60% of our customers, I'm not saying that they have less money, but their behavior is different, right? You know, a lot of these people actually earn more money than people who went to university and stuff, or like the top 40%, that 40% of our customer base. So we were thinking through, how does that look like, and how does the acquisition look like? I'll explain to you how we're thinking through it in a moment, but let me kind of go into the example of Nubank that you gave, which is an example that we get over and over again as well too. Nubank made their money and their fame through credit cards. That's how they launched. They launched credit cards. They made it very easy using data for customers to open an account and to start spending their money using credit cards, right? We don't have a culture of that either in Africa. And, you know, not only do we not have any credit cards, we don't even have debit cards. And I'm sure you know this. I don't know if it's the same in Kenya, but it's certainly the same in kind of West Africa.
It's the same everywhere.
We don't even say debit cards in Ghana. You know what we call it? ATM cards. I don't know if you call it that in Kenya, right?
I mean, I think a section of the population still calls them ATM cards, at least still thinks of them as ways to access your ATM.
Yes. I mean, a debit card is not to spend money in a shop. It's to go to an ATM to take cash out to spend money in a shop, right? You know, it's an ATM card. So when we were thinking through this, if you launch credit cards in Ghana, like if we launch credit cards, which obviously we can, you know, we're not unable to, there are no merchants that accept them. There's no culture that accepts them as well too. You know, it's still a cash culture. So as a result, we had to think of our own nuanced approach in terms of how to grow in the market. You know, we don't have the luxury of like an Ant. We don't have the luxury of Nubank, but our markets are just as big. Our people are just as savvy, and are just the demand is just as high. We just have to find our own kind of approach, whether it's Ghana or Kenya or Uganda or Cote d'Ivoire. We have to find our own approach in terms of how to scale in this market with smaller pockets, by the way, because funding allocation is very little in our part of the world, right? And it's a sore point, which I will talk about in a moment as well too, I'm sure. So the way we've looked at it is we've tried to figure out a way in which we can acquire our customers organically. Instead of finding a partner where we can then acquire 100,000 customers, how can we go directly to customers and acquire them through word of mouth? This example that I gave you of these 12,000 customers acquired this month, it was pretty much entirely organically, 45% entirely organically, and 55% through referral program. I gave you the example of the acquisition cost of a bank in Ghana, right? I give you the example of acquisition cost of a bank in the UK. Our acquisition cost is $1.3 at the moment. It's nothing because we're not spending any more marketing. We don't have branches. People are going crazy talking about Affinity because we are the best savings product and platform in Ghana. Like I mentioned to you, we're free. We have high savings accounts. We have no limits in our account either, or transaction limits as well too, which is very important. And the core essence and organizing idea was centered around that. What that means is we acquire customers. So we did 7,000 customers last month. We're doing so far 12,000 customers, and we still have 5 days to close off the month, right? We're obviously growing 50% month on month. Let's say we do 20,000 customers next month. In 5 months, we can get 100,000 customers that bank in Middle East I told you about can get in 1 day, right? We have to find hacks in which we can resonate with customers that are more organic and better that way, without the 400 million of funding that bank got in the Middle East, which is very important.
Just continue.
Sorry, that's one way we look at it, like kind of that organic acquisition. The other thing that happened that was a surprise to us is we've now found other fintechs and other partners actually coming to us saying, we need a bank that we can work with because we're entirely API driven. And that's something that surprised us. We have a new kind of segment of the business. We have business customers, we have retail customers that are kind of direct, B2C or B2B.
Yeah.
Most of our B2C customers are actually micro enterprises anyway. So they're actually technically B2B, but
Yeah.
they have personal accounts with us. And then the last segment is actually partnerships. So now we're finding fintech providers. We're finding people who are supporting basically farmers. As an example, they have a cooperative of, let's say, 100,000 farmers that are now looking for solutions in which they can go to get rural access that banks cannot access,
Yeah.
that we as a fintech can help with.
Yeah.
And we're now kind of doing partnerships that way. So we started building our business development team. We're now building a partnerships team, and now we're looking at opportunities in which we can look at alternative sources where, similar to like a new bank or an ad, we can find hacks where we can grow our customer base even quicker through these kind of like partnership platforms.
No, it's interesting. I know a bank in Kenya that started on the other side. So they built the tech, and then they went into partnerships, and now they're moving now into like the kind of SME and retail space.
Yeah.
But speaking of organic kind of acquisition, what is like the distribution model? Because surely it can't be purely digital. So how do you set up your teams to go into the markets and start acquiring these accounts? I'm sure there's like I've read about an agency model. Maybe you can just add color because into that agency model, because it's a very critical point. So there's an agency model, and then during my research, I found that like, is it 50 or 60% eventually could convert into digital customers? So
That's right.
I want to understand that customer acquisition model and how you set up your teams to do that.
And we've been going through a hugely iterative process since last May, by the way. So we launched our mobile app last May, and that's when we started seeing this data coming through. And from about May till current times, we've been looking at different kind of acquisition channels across all our platforms.
Yeah.
Maybe I'll start off by kind of naively speaking about how I approach this. Okay. As somebody who went into this, I thought to myself, it's very binary and black and white.
Yeah.
Customers we acquire via agency, customers we acquire via the mobile app, right? Women in the marketplace, people who just graduated university that don't have time and sell things on TikTok and Instagram. In my head, it was very, very binary, and that was obviously a huge mistake.
Yeah.
It was a very kind of naive approach.
Yeah.
We launched our agency platform in 2022. We got our license upgrade in March 2022. For the first time, Affinity as a brand existed in 2022.
Yeah.
In November 2022, we launched our agency platform. It was the first product we put into the market. And we had 30 agents. And those agents do a 2-kilometer walk each day. We actually had about 20 agents back then. We have 32 now. They went to the market each day and they acquired customers
and just to clarify, because the way agents are understood in a big chunk of African fintech is mobile money agents, right? But these are more of like sales reps. Just so that the nomenclature can just cut across, right? So these are more of like individual sales reps. Let's stick to the agents term because it's your business. So there's some more of individual agents that are going to the market to kind of engage customers.
100%. So they're not the agents in how we see like mobile money is.
Yeah.
If you were to walk into a bank, you'll have a relationship manager, right?
Yeah.
And if you're super important, you'll have access to the branch manager, and you go and people go golfing and they get loans that way, kind of that old school way, as I'm sure you know.
Yeah.
We wanted to take that experience to the micro level and take those we call them actually relationship officers. That's the official term for them.
Yeah.
We wanted to take these relationship officers basically to the customer. So what they do is the customer doesn't leave their place of work because it's a huge opportunity cost. Most of our customers, when they leave their container store or their hairdressing salon or their restaurant, revenue goes to zero, right? They're the driving force behind your business. Yeah. So from an administrative point of view, we don't want to give them more work. So we meet them at their place of work. So these agents come up to you. They say, hey, would you like an account? Sure. They take a photo of you. They do what they do, like what the app does basically, but the agent does it for you. The relationship officer does it for you. The customer gets a text message, and then the text message has their account number, their codes, and everything, and then they can start using the USSD channel to transact, basically, and to save. That was the organizing idea.
Yeah.
So since November 2022, until the point where we launched our app, we acquired about 10,000 customers by the agency side.
And is there any paperwork, like you have to fill a form, or it's just purely digital?
No.
Okay.
So when you open an account with us on the mobile app, everything is digital. The app itself, you take a selfie, you fill out some information, you put your whatever ID number, and then we do all the checks in the background. It's the exact same process, but instead of you filling it out, a
Someone
relationship
else.
officer is
Yeah.
filling it out for
Yeah.
you,
Yeah.
right?
Yeah.
That's it. So it's fully digitized. And then you can deposit and withdraw basically from the agent, or you can go to any mobile money vendor, by the way. And so you can put money in any mobile money vendor and transfer to Affinity as well too. So we have all interoperability, right? And that's sort of about 90% of our deposits come through those sort of transfers. So that was the first plan. Throughout that process, we were growing the business. So I mentioned to you, we started about 20 odd, relationship officers. It went up to about 30 odd. And then it took about a year and 2 months since we applied for the app to get approved. Our app was approved. Our app was approved in December 2023. In January 2024, we started testing it out internally and making sure everything works. In May 2024, we put it out into the market.
Yeah.
And what we noticed is obviously the growth has been good. I mentioned the numbers to you, it's been super strong. But the thing that surprised us the most is that almost 60% of our customers that were acquired via our relationship officers switched to using the app. And that was something that was very surprising.
Yeah. Yeah.
Then all of a sudden, our relationship officers were telling us, we want to teach our customers how to open an account. So now instead of opening the account for them, they send them a referral code and they educate them on how to open an account, to take a selfie, to do all that stuff. And that's created a viral effect where those customers now then go on to explain to their next of kin, their spouse, their kids, their cousins, their customers, their suppliers about how great Affinity is. And that's kind of created that viral effect, which is very important. The reason this happened is because, as I mentioned to you, people are very time constrained. They wanted a richer experience, and you can only do so much on USSD, but you can do a lot more on an app.
Exactly.
There's full visibility. It's rich. We've kept it that our app is very low in terms of data intensity. So it's under 20 megabytes, which is crazy. And it was an intentional build that way. And what we realized is that that's how, even though all these customers that we're acquiring are huge, most of them are actually referrals through our relationship officers now.
So very super interesting, and I think that's how you have to do it, because one thing I've observed in the market is that you've got two types of players: people who go purely digital, and they miss the relationship aspect of actually human beings, and especially in a low trust society, that is like a super important thing. And then you've got some who go purely physical, but then they struggle to graduate into like a digital experience, because there's only so much you can do with a physical, purely in-person kind of approach.
100%.
Especially when it comes to fraud.
100%. I was going to say, and literacy is something that's super important.
Yeah.
So the one thing that we noticed that was very important on a trust build is the sort of physical touch points. When people saw T-shirts, when people saw billboards, when people saw agents, when people saw any of that stuff, they realized that we're real. We're not a scam.
Yeah. Yeah.
When we did we did a marketing campaign for about a month and a half towards the end of last year called "You Are In," hence you have this logo here tag. The regulator came to our office and spoke highly of us. That was a stamp of approval that we're regulated. They trust us. We're well, kind of run, and we're well governed, which is very important. Things like that are very important to build trust. Relationship officers are a great way of building trust. But I have to say, it's something that's patient and you have to build over time. And then becomes like you build a network effect. But on top of that, we had the luxury to do that because of the support that we had from our investors. So one thing that was super important is we had partners that we worked with. We worked with Meta, so obviously the owner of Facebook and Instagram. And also we got grants through our partners at Finca from the Cisco Foundation. And these grants were to explain financial and tech literacy to our customers. To explain to them interest rates. Ghana was going through a very difficult time in 2022. Similar thing in Kenya, as I'm sure you were very aware of, and Nigeria. As the shilling collapsed, interest rates went up. It was kind of a very difficult period for all of us. We had to explain to people why it was important to understand interest rates and inflation. We also had to explain to them like online safety, one-time passwords, fraud, all that element. We use products and we use our relationship officers and we use messaging not to sell Affinity, but to educate our customers on why this matters to them, which was very important. And it was really thanks to a lot of these like foundations and these thought leaders that supported us, basically either through a thought partnership program where we were able to do ads on their platform. Basically, it wasn't monetary; it was sort of like ads, or basically it was campaign spending specifically around literacy and online safety and digital and financial literacy. So we're very, very lucky on that front.
Great. I mean, that's really interesting. Now, one thing that I think about is that everyone says that they've got advanced credit scoring, right? I think if you
Yeah.
ask any digital credit company, we've got very good credit scoring. Um, but you have a hybrid model that includes people and technology, right?
Hmm.
Have you kind of run kind of regressions to isolate what's driving the 2% repayment rate, right? Is it that, I mean, the 2% NPL, is it really the strength of our credit models? Is it the fact that these people have spoken to an affinity person before and they feel like they need to repay, they need to stay in good books with this company? Is it because like I'm getting a loan for the first time, or maybe someone's actually giving me limits that matter and it's important for me to keep repaying? Because I think a
Yeah.
lot of times, like, people bet their houses on these credit models, but then as they scale, they realize that the credit models were not that predictive, they were not that useful. How do you think
Yeah.
about that?
Yeah, it's a very good question, and I would say it's a combination of the first two, and not so much the latter. I
Okay.
don't think people have like some sort of loyalty towards us as
Yeah.
first-time borrowers. They
Yeah.
feel like
Yeah.
because if they don't want to and
Yeah.
they're of ill repute, they're gonna bounce, right?
Mm.
They're not gonna think, oh, I'm thinking of Affinity and I want to pay back my
Yeah.
loan.
Yeah.
Um, I think it's two things. I think the data that we collect for our credit models is something that's super important. And also don't forget, people don't come to us for credit. Credit is like a reward for
Yeah.
being a good customer at Affinity.
Got it.
And these are not people that have borrowed for the first time. They've had either access to microfinance institutions, they've had access basically to instant lenders. A lot of our registered SMEs have probably borrowed from a microfinance institution for like a 3-month loan at higher interest rates that we provide. You come to us because we have the best banking product. We make your life super easy to open an account, to pay your staff.
Yeah.
It's free.
Yeah.
And then as a result, you get access to a loan. That loan is the best loan you can get on the market, right? Whether it's a 3-month loan or an instant loan or a 2-year loan or a 5-year loan if you're super lucky from us. What we base this loan of is actual data that tries to understand the affordability of that customer and the capacity to pay, which is very important. So you look at two things. You look at how much are you earning and how much are you spending. It's really that basic.
Yeah.
And then as a result, you can quantify at the end of it, okay, if Tarek has at the end of each month $100 in his bank account and it's growing steadily, it means that his inflows are X, his outflows are Y, X minus Y is equals to 100, right? So if I give a loan to Tarek now, maximum loan installment I can give is 100, right? And I'm taking a lot of risk if it's at 100, right?
Yeah.
Ideally, I will give a loan installment that's probably like 25 or 40 or something like that, right? That's the core basis basically of analytics. But you have to have that data.
Got it.
You have to be able to prove that data, which we can obviously on our platform, given the fact that we have all these accounts and we have all these transactions as well too. And as a result, you can underwrite. So the way it works with us is we give you a loan, you repay back at least 3 times, and then we extend the loan after that in size. And that's very important. The second thing as well too, and I would like to say this, I don't have the regression models to prove it. I would like to say just, from like an emotional point of view, I think also our customers understand that if they're good to us, we're good to them as well too. Because as they reborrow and they grow, their loan size increases, their loan rates reduce. So there is a loyalty that happens. It's sort of like a symbiotic relationship. I don't want to say they have an affinity towards us because my team member will slap me for using that word. But we end up building a reputation with them where we do actually care about them.
Yeah.
And if they were to default on their loan, it would be an issue because they would lose that relationship with us as well too. And where would they go after that? There are very few alternatives.
Yeah.
The last thing I want to say is these are all very kind of soft, wonderful things that I'm telling you. Of course, it's not just on the basis of that. That's sort of like the ideology. There's also very strict kind of credit processes that you look through, where you look at how do you provide a loan to the customer. If they want to borrow, are you giving them the right kind of loan? Because even if they're good borrowers and you give them the wrong kind of loan, they'll default.
Yeah.
If they want a growth capital loan for 1 year, but you're giving them a 3-month loan at a high interest rate, they will default.
Yeah.
Because they will misuse that loan, right?
Exactly.
It doesn't mean that they're a bad person or their business is bad. They will default.
Yeah.
So how do you get that data basically to underwrite it?
Yeah.
Secondly, on top of that, which is super important as well too, is how do you make it easy for them to pay back? Don't forget, unlike a digital lender, we actually have the deposits of the customer. So if we're going to take the loan installment, we take it from their current account.
Yeah.
The equivalent. We in Ghana, at Affinity, we call it a daily account, not a current account.
Yeah.
And that's what basically we end up doing, which is also very, very important. So it makes the collections process easy as well too, as a holistic bank. You know, it's not like we're asking you to transfer money to the account and there's no manual process. We debit it.
Yeah.
Also, we have automated systems. If there's not enough money into your account, we send you a note and say, in 3 days' time, we're taking money from your account.
So
please make sure you have enough money. You know. And then if you default, if you don't pay, like a day later, 3 days later, a week later, a month later, we have a process that we kind of go through.
Yeah.
So it's an entirely robust process that we go through that we started off manually doing.
Yeah.
Then we digitized. Then we automated as well too. And all of these processes, from our account opening process to the instant loans that we provide to the SME platform that we're building, it took about 4.5 years to build all this stuff. It requires a lot of patience, basically. So the results of the last 6 months that have been astronomical are not like an overnight success. It's something that I've been building for the last 4.5 years, and certainly me, from a personal journey, you know, a decade of this leadership journey.
Definitely makes sense. So just a small break, Limo. I think you need to charge the. Yeah, it's running out of charge. I just noticed something, and then we'll get back to it. But, you know, it's true, like, you really have to plant the foundations deep. You know, it's like a bamboo tree. You know, you spend a lot of time growing the roots, and then now, all of a sudden,
all of a sudden it shoots up, yes.
And
you know, and maybe, I mean, when the camera's charged, etc., because I want to kind of talk about the
we can continue. We can continue. Like,
we can.
Yeah.
Okay.
So
I mean, one of the things and one of the key lessons that I learned as well too is I have no doubt, and all my investors understand how big the opportunity is in our part of the world, right? Affinity operates in the most profitable sector in the world. Banking is the most profitable sector in the world.
Yeah. I think it accounts for 20% of global profit pools or something like that.
It's crazy.
Yeah.
And African banks have a return of equity of above 30%.
Yeah.
And completely manual processes as well too, right?
Yeah.
No matter what anyone says, every bank in Africa does not really have a digital platform, right? It's kind of bricks and mortar, right? Yes, they have an app, but it's an afterthought. It's not, they don't lead with it, unlike us, right? So the opportunity is huge. But the conversations that we've had where you have a number of uphill battles, right? You don't have a hack like an Ant or a new bank. So you have to figure out your own. Secondly, you're against an environment where people distrust financial services, where if it's not real, there's that sort of like digital element as well too, right? Then there's a huge kind of literacy element where every banking that was developed in the global north has failed the global majority, right? So you have to reinvent it. And if you look at all that, you know, we understand it as users, you know, as a Kenyan, as a Ghanaian, you know, we've lived this experience growing up here. I remember my dad walking around with the biggest, you know, like checkbook saying, I'm going to the bank to speak to the branch manager because I'm upset, you know. That would never happen in the UK. I would laugh at that, you know, it's so like an old school. But we live these memories. I have people on the team whose parents basically sell fish in the market, and they're the first to go to university. You know, firsthand, I've seen these experiences as well too, where thanks to financial inclusion, they were able to basically grow, not because they're lesser than anyone, but because they weren't afforded the opportunities that you and I were afforded, which is very important.
Precisely.
This creates a natural disconnect between who is funding you and what problem you are solving for. Because if you're replicating a bank, if you're a challenger bank or a neobank into Africa, the likelihood is if you don't understand how to do it, it will fail unless you have $200 million, right? The second thing as well too is you don't have $200 million. I mean, who has raised that amount of money for a neobank in Africa? It's hard. You know, it's very hard. And a lot of pressure comes if you are raising funding from outside of Africa, which most of those that have had astronomical funding runs in the past have raised money from outside of Africa. They want a model that's replicated that they've seen before, that they understand. They want the Revolut of Africa.
And they really struggle with some of this, like, we've got a 32-person sales team. It's like, no. It should be digital, and you're like, you can't do that in Africa, right? And what about operational risk and fraud and stuff? And like, no, without this relationship, you don't have a bank.
Completely. And a lot of them don't understand. They're like, but what do you mean that banks don't exist? I'm like, come, So I organize these trips, or I did in the past, and I
Yeah.
still do. And
Yeah.
it's so funny because I don't curate them. I want them to really have the shock of their lives,
Yeah.
right? So when we were still at Payflex and we're in this terrible office because we had no money, we had like one leaky air conditioning and a broken board
Yeah.
table
Yeah.
that we had a couple of books propping up on one end, and we
Yeah.
all sat around it.
Yeah.
Thankfully, when COVID happened, we'd moved into our new office. If
Yeah.
not, we would all have caught it sitting so close to each
Yeah.
other. I remember one of our anchor investors came to visit, and he went with one of our relationship officers. This is before when we were still Payflex, we were still ideating and testing at the time. And I told him, please go and visit some banks and try and open a bank account. He goes, I will. And in his pristine white shirt, kind of very, very private equity kind of minded person. He came back after 3 hours and he goes, it's a mess.
Yeah. Yeah.
Tarek, one of them, they wanted me to pay for the form to fill out. They wouldn't let me leave, without. I was
Yeah.
like, yes, this is what we're fighting against.
Yeah.
This is what we're building for.
Yeah.
2 years later, we had just raised the money to get our license upgrade now, but no one knew about us because we didn't make an announcement until recently, as I'm sure we were always under the radar.
Yeah.
2 years later, some more investors came to visit. This time, I decided to have a bit of a balanced approach. I took them to nice restaurants. I put them in nice hotels.
Yeah.
Obviously, I didn't say I didn't put them in nice hotels in the past, but I gave a more balanced approach of like, life is great here, but at the same time, this is who we're building for.
Yeah.
I remember picking them up from the hotel, and then driving to a nice sushi restaurant on the very first night, right? And there were investors that invested, and there were investors that did not invest in that trip. And one of them made a flippant comment where he said, the problem in Africa is you don't have many entrepreneurs. And it was really kind of fascinating for me because I asked him, was like, how do you define an entrepreneur? And he goes, like Series A, seed round, et cetera, et cetera.
Yeah,
I was like, you're defining an entrepreneur in the context of how you fund entrepreneurs, basically, in the global north.
Yeah.
I was like, on the way over here, when we stopped at the traffic light, he goes, yes. I was like, were people not trying to sell you toothbrushes and things like that? I said, yeah. He said, yes. I was like, are those not entrepreneurs? And he said, well, I guess they are. I was like, you have to reframe yourself and think about it that way. Because those people are the backbone of our economy, and they have been neglected in the past by the majority of service providers. And when you're building for fintech in our part of the world, when you're trying to solve things like banking, which is a huge opportunity to solve for, those are the people that you have to put first and foremost.
Yeah. And this actually now leads to this question I have around SMEs and retail, because you're serving both, individual loans, individual, people in their individual capacity and people in their SME capacity. And, in Africa, it's a very thin line, right? A lot of, individual bank accounts are actually used for business. I think the report that came back, I was in a conference, 70% of digital loans for a specific provider were actually to fund entrepreneurial activities. Now, this distinction is important because, if you need to be funding productivity for you to have confidence that this money is going to come back, especially in markets like Ghana, Kenya, where there's not really a consumption culture like BNPL or credit cards and all that kind of stuff, right?
Yeah.
So how do you think about the kind of individual loans and the viability of these individual loans vis-a-vis just funding enterprises, medium, micro, and small enterprises, and especially as you scale this out?
Yeah, it's a very good question, and maybe I'll start off by defining how we define these two kind of customer base. So we have two platforms. We've got retail banking, which is the numbers I talk about where they're going through the roof, and we have also business banking as well too. So for business banking, and this is maybe an exclusive, we are now private testing our business banking platform. So as a registered business, for the first time ever, you'll be able to open an account online with us. So you upload your documentation, including your company registration documents, all that. We do our tests and checks and whatever, and then you get an account. So that's business banking, and those are for registered SMEs. On the retail side, the reason we didn't call it personal banking is that it's retail banking, really, is because, as you rightly point out, the majority of those customers are actually business customers. But they're unregistered businesses. So women who might have a container store, people who might have basically straight out of university where they're selling something on Instagram, and that's how it looks like. What we do on that end, let me just kind of touch on that end, and then I kind of circle back on the SME side, the registered business side. What we do on that end is we basically credit score our customers based on their data and their information. if you are a salaried employee, let's say you work for, I don't know, you're a seamstress at a fashion company,
Yeah.
right? And you're earning $500 a month, and you're paying your rent and doing everything on there, and we see all that information. You probably have an X amount of money at the end of the month, and it's very likely that if you borrow from us on an instant loan, it's a personal loan that you're borrowing from us, right? We have that information to see
Yeah.
that.
Yeah.
However, if you're going back to that example of that woman who is now graduated from university and she's now setting up a business on Instagram, she probably doesn't have one inflow into her account, right? She
There's a
has
daily revenue.
several
I mean,
inflows into her.
yeah.
Exactly.
Yeah.
You can proxy that that's sort of a business account.
Precisely.
You know, it's being used as a
Precisely.
business account, or
Precisely.
even if she's like a street hawker, you know,
Got it.
selling food on the side of the road, or juices, you know,
Yeah.
homemade juices, or like catering company because she
Yeah.
makes the best cupcakes in her neighborhood or whatever.
Yeah.
You can have proxy
Yeah.
of the inflows and outflows, and her credit score might be just as good as that woman who's salaried, but the amount of money she can borrow from us is probably going to be higher.
Yeah. Yeah.
And that's how kind of that system works.
Got it.
We have limited that customer base to instant loans. At the moment, it's up to 3 months, so certainly better than the instant loans that are in the market. And eventually, we're now, as of next month, we're going to start testing up to 6 months as well, too. And then eventually maybe take it up to 1 year.
Yeah.
What we are the most excited about, basically, is long-term SME lending. And that woman I gave you an example of, whether she's a street hawker, you know, like selling juices, and this is an actual example of a woman who was at university selling juices at farmers markets until, you know, she started her own business. Eventually, if it works out for her, and I hope it does, she'll want to like grow her business, right?
Yeah.
She want to move from her hustling to her recruiting to her having an online store where you can order on WhatsApp and get it delivered, to her, you know, kind of even building something a bit more than that, you know, going from acquiring fruit to, you know, buying wholesale fruit, to going to maybe even building a farm, several outlets, smoothie stores. You know, the dream is big and huge, depending on what her drive is. You know. What we want to be able to do is provide her with those options. So she would migrate from that case into an SME account for her registered business.
Yeah.
She would borrow 3-month loans at larger amounts as opposed to the instant loans. And then eventually maybe even borrow $100,000 so she can invest in her business over a 5-year period, which would be the dream. And that's sort of the long-term vision in terms of how we're positioning ourselves, using data and her progression basically with us at Affinity.
And how do you secure some of these long-term loans whilst making the customer experience as seamless as possible?
Yeah.
Because a large part of securing these things, it becomes a very messy thing where you're asking people for documents that probably they've never even encountered in their lives.
Absolutely. So I guess that'd be a couple of things on the journey, right? So are they coming in at the point where they start with an instant loan, then they progress to larger loans? Or are they coming in directly as an SME into a larger loan?
As an SME.
They maybe have a 3-month progress with us. Let me kind of start on a couple of things. If you're a known entity and you've been banking with us for 2 years, there's a higher chance that we can underwrite a better loan for you than if you're a new person who's only been with us for about 3 months, right? In that case. Depending on what you're borrowing for and the size of loan, as I mentioned, we're kind of reiterating our instant loan. I don't know where it will top up as, but there will be a certain point where we will then say, okay, maximum instant loans when we mature in Ghana is, let's say, $5,000 or whatever, right? Because we can't take any more risk that way. For that loan, that's on the SME side, that's up to $100,000. It depends on if you are someone that have been banking with us for a while. You might have multi-borrowed from us, and as a result, we've mitigated the risk and you've grown with us. So less and less collateral is required in that case. Or if you're coming straight in and saying, look, I had one loan from you and it's a working capital and I paid it back. I now need to buy these machinery because I'm going to grow the business by 2-fold. What we would do in that case, if it's specifically for asset financing, we would securitize it collateralize it against that asset.
Got it.
What's great about Ghana is that we have a collateral registry list with the regulator.
Yes.
And the turnaround time, even now, when we're making out these loans, is between 1 to 3 days, like maximum. You know, so it's really nothing. And these are loans where, going back to the unit economics, we can justify basically an element of credit analysis and risk commitment, basically from our credit team, to actually spend some time, you know, kind of understanding the element there. It's digitized. But the loan, there is a manual intervention where there's a human touch there that's required.
And that's kind of inevitable. And now speaking to
it is, but it's not useful when the loan is $100. That's crazy,
for sure,
right?
For sure.
It is useful if it's $100,000 over a 5-year period. It's a different kind of, you know, the unit economics are different there.
Precisely, and I've spent quite a bit of time on that, like in my past career, and there's a huge gap in terms of actual useful productive credit that is affordable
Mm-hmm.
and that is longer term, right? Because everyone is happy to give you a 1 month loan, but a lot of entrepreneurs
Mm.
want, like I'm buying a truck. And one of the challenges is that, in my view, and this is just me giving my view, a lot of impact lenders into the space do not see these people as people who can actually become corporate titans, right? They want
Yeah.
to kind of maintain the impact story around $100, $500, $1,000 at most, but they don't see that this person who's selling juice could actually have a factory down the line, employing 200 or 300 people, and that's what you should be aiming for. Like that's the goal, right? And I find that, like, if you don't think about that segment like that, your best customers are going to keep graduating out of your business, and you're going to be
Mm.
stuck in this kind of cycle where you're not really scaling.
And you know me, I love my stories, especially with our customers. And whenever I have like a low point where I'm going through a struggling phase,
Yeah,
especially as a startup, it happens quite often.
yeah,
I spend time with my customers, but I often tell people that, Google didn't start off as a corporate, right? It started off as a startup and
yeah,
as in a garage,
yeah,
right? It's same thing with Affinity.
yeah,
I mean, I'm not comparing the two, but I was able to create this because of the access that I had and the options that I had and the privilege that I had, basically, from having those options.
yeah,
What we're trying to do with our customers is a similar thing, giving them the options. We're not telling them grow and be a corporate titan and whatever. Their appetite might be, I just need to take my kids to school and university,
precisely,
and afterwards I'm
precisely.
going to scale back and I want to retire.
Yeah,
Or their appetite might be like this person I talked about, the juice person. She might want to actually create a business
yeah,
where she builds a retail stores of juice, outlets across.
yeah,
What we want to do is provide her the option to get access
precisely,
to that so that her
precisely,
dreams basically can be fulfilled. And
exactly.
the one earliest example I have of that, which was kind of groundbreaking, was when we were still at Payflex and we were kind of thinking through lending, and we were a microfinance institution at the time. There was a woman called Liz who was selling plantains on the side of the road. Plantain chips, sorry. So she would sit there with a manual mandolin and slice it. And there was a dude at the back. I don't know if it was the husband or the brother. Never spoke to him, but he worked for her. And Ghanaian women are fierce. So slicing it up all the time, all the time, all the time. She borrowed from us. She started saving with us. She saved to borrow. She borrowed to buy more plantains at wholesale prices,
Yeah,
right? So all of a sudden, instead of buying a bunch, she could buy three, and it was
yeah,
cheaper.
yeah,
Then after that, we were testing still. We didn't know where it was going to go. We had an appetite from a risk point of view. We said we could lose the X amount with a number of customers. Let's see what happens and collect the data. After that, we gave her a larger loan, 3 months. She used that basically to build a small wall around her compound house. So she sold in front of her home, her family home, and she put an air conditioning unit in the compound house, the first AC unit in the whole compound. Only because now all of a sudden with the AC unit in there, she could buy like 20 times more plantain and it wouldn't rot in the sun and the heat. And then the prices came down. And this is a woman who went to school, doesn't speak English. She wrote all her finances on a sheet of paper that she
yeah,
rolled up and stuffed into her shirt,
yeah,
basically.
yeah,
No formal connect, but that is basically the entrepreneurial spirit that she had.
yeah, yeah,
We then went forward and gave her a loan. She paid back her loan. We went forward and gave her a loan for 6 months, basically, where she then imported equipment where she had an automatic slicing machine, mandolin. So she would just chuck the plantains in there, slice everything, fall on deep fire. All of a sudden, she had 12 people working for her. She went from bagging all these kind of big bags that she would sell to hotels and wholesale to then doing her own kind of small retail packets.
yeah,
I visited her not too long ago, and I went to say hello to her. And she speaks Ga. I used to speak Shwi because we're from different parts of Ghana. And so she recognized me. She nodded and smiled. And I said, I told somebody about you the other time, and they want to buy plantains from you. I said, can I have your phone number? Because I didn't have it. And she gave me her business card, and it said CEO at the bottom of it.
I mean, that's an
And
amazing
and
story.
but we didn't tell her what to do with her money, right?
Yeah,
We gave her that option.
yeah,
Now she's in the process of wanting to buy a farm like an hour away from Ghana so she can start planting her own plantains,
yeah,
right?
yeah,
Unfortunately, we can't provide that loan to her because
yeah,
we don't do kind of agricultural loans.
yeah,
But as we grow, eventually we will want to provide something to her. So
yeah,
she's now using the proceeds of her business to acquire the land and to grow and all that. But that is the indomitable spirit of a human being, right? Like the same story that I had as well too, where my parents wanted more for me.
yeah,
She wants more for whatever drives her, whether it's
exactly,
her kids, whether it's her being, driving well
Precisely.
whatever her background story
Yeah.
is.
Yeah.
And a financial institution should be providing that supports you. It should be there to empower you, and that's what we want to provide to our customers. Choice.
It's a story that resonates because I've seen so many of similar stories in Africa, and that's why,
Choice.
like, when you talk about agency, when you talk about like digital credit, I have very strong opinions about providing credit in Africa. Now I want to go into a
Can I?
boring, you can, yeah, just
Oh,
proceed.
I, I was going to say something, and um, we're still a startup, and it's still a difficult terrain to
Yeah,
navigate,
yeah,
right? Because you need long-term thinking and long-term alignment and all of that stuff, the kind of stuff we touched on.
yeah,
But I think to myself, if I look back and I got this license earlier, I would have failed. There would have been a higher chance of me failing. I don't know if you remember this, but like around 2015, the sort of alternative credit scoring model was something that was super hot. You said you have very strong opinions on instant loans and
yeah,
kind of digital lending, and I
yeah,
do as well
yeah,
too. And everyone was going crazy on like instant loans. We're gonna like alternative credit. We can track your phone. We can do this. We can do that. Blah 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 blah, blah all that sort of stuff. And it's a works of miracle. All the big banks were signing up with these kind of like companies to provide loans to MSMEs, and they were using this platform. And I remember it was a similar thing as well too in countries like the UK, where there was a lender called Wonga,
yeah, yeah,
which was a consumer lender. I don't know if you remember them.
yeah,
Yeah. And they were different to what like digital lenders in Africa lend. They were lending to people with poor credit history, right? But they were using a platform that gamified lending. They were trying to figure out, they could figure out exactly if your age, your dental records,
yeah,
and like your location. If you live next to a church, you're a better borrower. All these kind of crazy things. And I realized that people were gaming the system, because let's say I applied for a loan and I kept on getting rejected. All I would do is pick up my phone and go, "Hey, can you apply for a loan for me? My friend who was applying for a loan, getting the loan over and over again, apply for a loan for me because you answered the right
yeah,
questions." And then all of a sudden, you ask questions like, name this president,
yeah,
ask all these kind of psychometric testing and all that.
yeah,
And all of a sudden people were getting loans, and then they started defaulting.
yeah,
I lived through that, where it was such an exciting phase, and I was getting FOMO thinking we should be doing this, et cetera, et cetera. And then I saw what the results were, and I said, you have to go back to fundamentals. You have to understand real data.
yeah,
What is the probability of default? What
yeah,
is the loss given default?
yeah,
What is the capacity to pay?
yeah,
What's the ability to pay as well too?
yeah,
You know, are they bad people? Are they good people? We
yeah,
don't know. We start small and we grow on top of that, but you
yeah,
use data to lead it, and you use actual data. The other stuff on top of that can be, an overlay where you can refine it. And, we will start adding things that are ethical on top of that, perhaps. But you cannot base an entire credit score on the back of that, because it does fail eventually.
And I always say that technology will change, but finance will never change. Like, finance remains finance. Like, the principles of finance, 100 years from now, I'm pretty confident will remain the same.
100%.
Yeah,
And people don't have memories. That's
yeah,
how we survive as human beings.
yeah,
Like,
yeah,
you remember the credit crisis and
exactly.
everything that happened with MBS and
Yeah,
CMBS
yeah,
and ABS? Everyone was going, "Oh my God, we're going to learn." And we're like fish, like we survive. All of a sudden now we're re-innovating. We're doing all this new stuff. There's
yeah,
crypto. There's all this sort
yeah,
of stuff, and things will blow up, and
yeah.
regulation will change, and then we will forget, and
And
everything will kind of be,
something new will come
happen
up.
again. That's what happens.
Now I want to talk into a more boring aspect of your business, around some of the technology decisions, because, we talk about fintech. One of them is that I think there's some stuff you've built, and there's some stuff you've kind of like outsourced from just a tech perspective. I know, if I'm not wrong, you've got like a Mambu core banking system and all that. And in the digital banking space, there's all this build versus buy kind of decisions, right? Where, for instance, a Revolut, a Nubank, a Moneypoint in Nigeria have all built the entire tech stack in-house, right? And that's supposed to give you long-term product flexibility at scale. The cost, is supposed to be lower. How did you think about that, given your background, given what you're trying to do around those kind of like core technology decisions?
Yeah, it's a really good question, because I think the way we looked at it was necessity. If I were a fintech in Europe, I'd be able to raise more money,
Yeah,
so costs will be less of an issue.
yeah,
But also, I would have a bigger choice in terms of who to partner with. So ID verification, for example, there are some huge ID providers here in the UK. they don't operate in Africa.
Yeah.
And obviously they charge in dollars when we're earning in local currency. So already there's an exposure and issue there. I think the first port of call is, can you afford it? And number two is that do you have that option? Because if you buy, your go-to-market is quicker.
Yeah. Yeah.
And that's how we've always thought about it. So with the case of Mambu, it's a known entity to the regulator as well too. They're approved by the regulator, which is important.
Yeah.
And on top of that as well too, they are a plug and play API platform. We were actually looking at 3, and Mambu was the one that won. I think 2 are still in operation, and 1 has since collapsed as a startup. They couldn't raise further funding.
Yeah.
Everything else that we've built, and we built probably 90% of our tech stack, and we'll learn more as we go through, has been because of necessity, because we were not able to local part.
Yeah.
Unfortunately, that's what happens at the end of the day. Now, the benefit of it, and which you rightly point out too, and I mentioned our acquisition cost at the beginning, that acquisition cost is low because most of the tech stack is ours. We're not paying SaaS, per customer API or whatever.
Yeah.
We are paying what we need to for what we're using at the moment. But the reason why it's not like $125 like it is for like a Revolut is because we built kind of most of what we've done ourselves. We're not kind of pinging with APIs and paying partners and all that sort of stuff. So at the end of the day, the go-to-market is longer, but the benefit, hopefully wins at the end of the day there. You just have to, out of necessity, you have to kind of approach it and try and figure out how to survive with not as deep pockets as your counterparts.
Yeah. And now speaking of deep pockets, I think you raised an 8 million seed round. So that was pretty impressive. Yeah. Congrats on that. Next bunch of funding that comes in, I think with the numbers you're doing, it shouldn't be impossible to raise a Series A. But like going forward, one question that's likely to emerge is that how does this scale to the rest of the continent? Or, how does this go beyond Ghana? Because, investors are like, at some point, single market risk, especially if it's not a South Africa or Egypt or Nigeria, single market risk becomes an issue.
Kenya.
Or Kenya. But even Kenya has been having some challenges of late. But, so how does this scale?
Dude, come on. I've spoken to so many funds, and they're like, if you're not part of the Big Four, we're not looking at you. You can't be part of the Big Four.
No, but I mean, Wave did a really good job in Senegal. So I think there's
correct.
You can actually go deep in some of these non-Big Four markets, and
Yes.
but the question is like, how does that scale? And the reason why that is the case is that maybe Ghana might have such a gap in terms of like retail, lending or retail banking. But if you go to South Africa, Capitec has done a relatively good job, taking care of that market. Maybe in Kenya, an Equity Bank or, might have done a similar job. Like, can this model travel as well as you think it can?
Elsewhere, yeah, and those are 2 banks that I highly admire, by the way. And I often say that we're kind of, I think Equity Bank started first, and obviously Capitec.
Yeah.
I just look at ourselves as like another iteration of that, but obviously a hugely digital overlay.
Yeah.
I want to say a couple of things, because it depends how I answer the question would depend of me as an investor. I'm an investor in the business and a shareholder as well too, or if I was an operator.
Yeah.
If I was an operator, the key difference between us and, let's say, a typical fintech is, or a neobank, we're not a payments provider, right? So if you were a Stripe, or if you were one of these big players around the world, like international growth is so important, because a Visa, MasterCard, a Stripe, any kind of PayPal, all these kind of payments providers, it's a very high volume, low value business. And it's winner takes all, right? There's the reason why there's only 2 card providers, Visa, MasterCard, because it's winner takes all.
Yeah.
So in that context, it's the scale and the exposure is hugely important.
Yeah.
As a bank, it's different. Banks exist in many parts of the world, side by side, all being hugely profitable. And it's a very different approach. So with that in mind, if I answer the question from an operational point of view, I would say let's double down on Ghana, grow and mature in the market, and then think through an international strategy.
Precisely.
We're solving for in Ghana exists in Kenya. It exists in other parts of the world as well too. Other parts of Africa, I beg your pardon, and the world as well too, in Asia and Latin America, but we're Africa. So that's sort of very important. If I looked at it from a shareholder's perspective, given the fact that there's like country risk, etc., I would say it's a nuanced balance. Let's make sure the team and everyone is stable in Ghana, which we're in the process of. We're made a couple of key hires recently, and we're going to continue doing that as we kind of mature and kind of the growth trajectory continues in Ghana. And then I think maybe in the next few months or so, start approaching how we expand outside of other territories too, because it is on the cards.
Yeah, definitely. I mean that's a you highlight a very interesting nuance, and I wouldn't have answered that question much better than that. But like generally now,
Thank you.
just as we begin to wind up, what's been the most counterintuitive thing you've learned in this journey? Specifically, you thought this was going to happen, but what happened is very different. And even interestingly, like what counterintuitive data points have you come across in your business? And the reason why I ask this question is because everyone has an idea, but the people who are operating things on the ground, they're coming across things that might not necessarily have been expected.
So I came into this very stubborn, and I'm sure all my board members and investors will say the same
Yeah.
thing. Like, as a founder, you have a pre notion in terms of what you want, and it's very black and white. If it wasn't black and white and there were a lot of gray and you would start questioning yourself, you would never be a founder.
Yeah.
So the one example I gave is how I thought acquire by agency, acquire by mobile, nothing in between. Obviously, that went out the window, and it was a very humbling experience.
Yeah.
So what? So are our customers. I there were points in time where I was like, no, being kind of very stubborn. And if you don't listen to your customers, you will fail. And the stuff that they wanted, I thought was part of what we should give. At the end of the day, we had to actually provide to them. And it was very basic things where like understanding the market, understand where they're coming from, and understanding that transition, understanding what the team are saying and their lived experiences, and really having a very nuanced approach to product development and product design.
Yeah.
And also customer journeys, which is very important. Like being very stubborn against having like kind of contact centers, very stubborn in terms of how we developed our app. Like, when we developed our app, and I've told the story before, so apologies to anyone who's listening that I've repeated, but we built an app, had like a new UI interface where, kind of like post, Snapchat, everything is kind of swipe based, right?
Yeah.
Like you go to Revolut and it's kind of all over the place and it's kind of and slick. We designed that, and we saw that a lot of our customers didn't know how to use it, and it frustrated us. And we got frustrated towards our customers, going like, "What do you mean you can't change your PIN?" As we were videoing them and doing our kind of working, and we realized that our customers, especially those that came in via agency, using the apps that were pre-installed on your phone, which was the old UI of like scrolling, not swiping.
Yeah.
A very simple example like that.
Yeah.
So we had to ditch and rebuild our entire app interface to suit the customer, not to suit us. Where we thought it was like sexy and cool, they were like, "No, it's not. It's complicated. We don't understand this."
Yeah.
And the minute that happened, you kind of like I kind of breathed a sigh of relief and kind of relaxed into it, and I thought to myself, you know what? Listen, that's all you can do. It's not about me, it's about the customers.
Yeah.
Whatever we're doing, we listen to them, and they are the ones who are leading this business. It's not you, which is very important. And it was a very humbling experience, and all the kind of frustrations went out. I want to answer the question as well in a second point of view, which is more as a founder. And I've spoken to a bunch of founders about this, and it really has to do with how difficult it is operating in our part of the world. And it really is extraordinarily so, as I'm sure from speaking to other people. There's always this element in my head where I think to myself, if I just had this, things will be better and all my problems will go.
Yeah.
If I just raise a little bit more money, if I just make that higher, if I just release this product, if I just get this approval, things will be better and all my problems will go away. Good news is when you do get to those milestones, if you do, and you're tenacious enough to survive them, the problem does go away, but new problems arise over again.
Yeah.
It was sort of like how we survived COVID as well too. We had loans out. We were still Payflex at the time, but we gave loans out, and all our borrowers were to go home for 6 months. So they literally could not pay back their loans.
Yeah.
We were about to collapse.
Yeah.
We had all these kind of things that we went through the IMF bailout, the Ukraine crisis, when as prices went up, inflation at whatever 68% at one point, base rate at 29%. Where how can you price interest rates on your loan when base is at 29%?
Yeah.
But the only thing you can do is trust the process. You can't. I had so many sleepless nights that then affect the business, affect the team, affect my mental health, and all that. And the one thing that I learned throughout this process as well too, which was very important, and it kind of surprised me, is to breathe. To take a step back, to trust in yourself and the process basically of your team, your investors, your board members communicate very effectively and work together, basically, trying to overcome these hurdles. Because no matter what we went through over the last few years, which was, kind of harrowing, the best of times, I'm sure the future in our part of the world, until we succeed as businesses and we help aid social economic development, it will continue to be that, even though we're hopefully trying to alleviate that problem slightly each day.
Yeah, no, you're so right. I think there's a Caribbean country that has a saying that behind mountains are more mountains. And so you'll always come across problems. There's always going to be another mountain to climb. So makes a lot of sense.
100%.
Anything you'd want to say, like in terms of your business, anything that you'd want to be out there as we wind up?
Just a thank you for listening to us.
Yeah.
It has been a very long journey, as I mentioned to you. For me personally, it's been a 10-year journey.
Yeah.
And obviously 2022, since we got the license after acquiring Payflex and doing the upgrade, and then just over a year in terms of official launch. So even though you kind of see the tip of that iceberg, or what is the other saying as well too, that of course it's very calm above water, but underneath is like flapping around as well too.
Exactly.
It's very important. It's very important in our ecosystem to have people like you that help explain to our ecosystem the stories that we've gone through, because it's very easy to see kind of the success part, and very easy to also kind of not understand or dismiss the stuff that we've been through, which kind of puts an armor around us that wants us to keep fighting. So just want to say thank you for giving us this opportunity as well to listen to our story.
No, thank you. And this has been generally one of my favorite conversations. As I told you, when I was doing research for this, I was like, wow, this is an incredible story. It ticks so many boxes in terms of my personal views on fintech and digital banking. And so it's great to see that someone is doing this at the scale and the sophistication and the intensity that you guys are doing it. So all the best, and you're wishing you guys really all the best.
Can I do a small call to action as well, if you don't mind?
Yeah,
to end the conversation. Sure. If you're in Ghana, please download our app. You can either download it on the App Store or the Play Store, or dial *229#. We're also always recruiting, and we're also looking for partners all the time. So please reach out to me. I'm on LinkedIn, social media, email us on our website. And if there are any partners out there that want to partner with us in Ghana or thinking of expanding in Ghana, also reach out, because we're here to support others as well too.
Cheers, man.